Hello and welcome to this weekend silver technical analysis. And what a week it has been for the precious metals, or the five on the screen: silver, gold, palladium, platinum, and copper. Yes, copper's not a precious metal, but it is on the periodic table of elements, and all five of these had significant gains. Palladium up 13 and 1/3%. Silver up over 10. Copper up almost 7. Platinum up almost 5. And gold was the weakest link, up almost 4% for the week. And a lot of it is not because of strength within the precious metals, but weakness within fiat currencies, as we have been seeing a lot of big gains in many different commodities, including, of course, this silver market. This is the weekly chart, and as it was having these magnificent weeks, it was starting to become overextended. We in this little area here, there's a time consolidation and an upward trend time consolidation. Therefore, is it up too much? Is it extended? A little, yes, but it's not overextended right now because we've had our retracement from this 29 and 1/3 level that brought us back down to 25. Now it's back to that previous resistance point of view. So it's been a remarkable breakout, and a lot of times when I say when you have major resistance, that oftentimes it can become support. As of yet, the Dow Jones has yet to find support at its 1,000 mark from many moons ago. Same with gold at 1,000. It has not came back to it. So the question is, will silver ever come back to this 18.5 to 19 level, or even this 21 level? If it happens, it would be on a decent size pullback right now, because when the support level doesn't happen, meaning when you don't have a push back to this level, then you're going to have big gains, and thus what you're going to want to do is adjust to where potential support can be. That's why we go from 29 to 25. That was very normal. If we have our gains up to, say, 34, 35, 36, then you would expect the support area to come at a much higher level as the market continues to proceed towards the upside. I mean, we can talk as much as we want about these different types of trend lines, but the bottom line is it's holding up really, really well. When you have a resistance level, sort of like what we had in here, and it is broken above it, the 25 test right in here found support on this trend line. It does seem as if that it is ready to have these major moves towards the upside. Maybe at some point we can test this type of trend line, but for now, that is still a little bit away. Now to the 15-minute chart that goes back to the November time frame, and it's holding up very nicely above this trend line right now. It's back, of course, to this 29 level. We have a rising 5-day moving average. When you have a 5 above the 10, above the 20, and well above the 20, buyers are in fierce control of this market. Maybe a lot of it happens to do with JP Morgan and the big financial institutions that are covering shorts, and they have a heck of a ways to go right now. And it's still, to me, extremely cheap at these levels. I am not kidding when I talk about silver towards the 100 time frame, as far as 100 fiat dollars, that is, in the next 12 to 16 months. But I'll talk more on that closer to the end of the month. So it's in a nice uptrend right now. As far as any type of uptrend lines, I know it's a big line, but it's obviously gotten above that. So the buyers in complete control. I guess on a very short-term level, you might want to come down to this 29 level, or maybe even down towards this trend line. But it had this nice consolidation to end the day, and it wouldn't be at all much of a big surprise if we had a nice gap higher that would bring us north of the $30 per ounce level. As far as the price memory is concerned, we are starting to get more movement within this current range here, or the 28 to 29.5 level. And because we've been playing around with this for so long, that means two things to me. One, it wouldn't be all that bad of a thing if we range within the 25 to 29 mark, as these variables would start to go higher and match up equally a little bit with these older levels. That doesn't mean it has to do it, but it wouldn't be the worst thing in the world either. But because we've also had some nice testing of the 29, 28.5 level, we could very easily go into that 30 mark. And if we go into the 32 level, then that brings us to the Fibonacci. It's not shown too much on the screen. It's from the range of 4 to 8, which meant that there was some Fibonacci right in here, and, well, it didn't really find much. And then there was Fibonacci here, and it found a lot. Then there was Fibonacci here, and it found resistance, and the next one's 31.5 towards the 32 level. So we'll wait and see how that works out, because if you break a Fibonacci level, very oftentimes you go to the next one. The next one after the 31.5 is roughly at around $50 per ounce. And a lot of it's because of the inflationary trade. And I noticed that with gas prices this week. I seen on Thursday that the price in Southern Ontario went up to around almost $1.10 per liter, from a little over $1 per liter. It was about a 7% gain on Thursday alone. This is the average USA gasoline prices going back to 1990. And it's obviously, the trend for this is obviously higher. And it did have the capitulation period back in 2008, but since then it's been managing to work its way higher again. This support was at this resistance, so previous resistance did encounter a level of support. Now it does look as if this $3 level is a pretty decent area. Will it have some resistance there? Well, maybe a bit. Maybe it comes up to $2.99, maybe falls back here, and then breaks this level, and then goes higher. Now, of course, most people do not want this to go higher because they use their gasoline every single day. They pay for it at the pumps. And that's exactly why myself and so many other people have been talking about buying silver or buying gold or anything that could protect you for inflation. Because if you're buying silver and the price of gas goes up here, if the price of silver outperforms the price of the gasoline, you would essentially be getting it for a cheaper price, where those that are holding fiat dollars will be paying more.